All right, folks, it is September 4th, 2024, and I have the absolute pleasure of welcoming back here our good friend Lynette Zang, an expert in so many areas. And we are so looking forward to having her back to talk about what's been taking place in the markets. We've seen this Japan carry trade unwind blow up last month. That spooked everybody. Folks calling for an emergency rate cut from Jerome Powell. And so we see that the economic data coming out over the past week or so has really started to show that there are a few cracks in this strong economy that they like to call it. And now we're anticipating a consensus across the board is that we are going to get rate cuts. The market's thinking that this is going to save them. We're going to dive into it today here with Lynette. How are you doing today?
I'm very happy to be back here, Zach. Thank you for having me. Lots going on.
So much to talk about. We have the yield curve starting to uninvert, and the last time that this was a false indicator of a recession, I think, takes us back to 65. Other than that, it's almost always an indicator of a looming recession. And this has been the longest yield curve inversion that we've ever had, yet the markets still think that we're going to have that soft landing. What's your general vibe on the market right now, Lynette?
Well, number one, I want to go back to 1965 because there was actually a run on the dollar at that point with foreign governments sending in their dollars to pull the gold out of the system. So, and I was there in 65. So even though I was young, I still understand what that was like, and keeping in mind that it's the government that will decide when it's an official recession, just like we're not in recession now, though you could talk to a lot of people and it kind of feels like that to them.
Yeah, absolutely. And we talk about it, the manipulated CPI, then they prefer the PCE. There's even more manipulation behind that one. Then if it does actually start to get too bad, then they just change how they, calculate it once again. They can always change it at any whim, and depending on where we're at in the election cycle. Now, what I focus on, Lynette, is trying to make sure folks have a game plan and they're prepared no matter who gets elected, no matter what happens, no matter what the black swan's going to be. And so I just want to get a sense from you, what's been your focus for the last couple months as we finish off this summer? What has Lynette been focused on most?
Oh, let me tell you, there's a lot that's going on. And even going back to that, I pay attention to the inverted yield curve quite a bit because they always want you to think that this time is different, but it's not. And what's so significant, because the 2 and the 30-year had reverted, and now it's flirting with the 10. So the 2 and the 10, a little bit here, a little bit there. But it's when that reversion actually happens that we typically do see that quote unquote recession. But here's the problem. There's only one way to fight a recession, and that's with inflation and money printing and dropping interest rates. So when they're talking about dropping the interest rates, you should always be careful of what you wish for. So, the labor numbers are showing that it's slower than what they wanted us to think. And the numbers that even came out today were worse. So, I think let's go back a month, right? When you had, to your point, the unpartial unwind of the yen carry trade. And then they stepped right back in there really fast and said, oh, no, nothing to see here, folks. Everything is just dandy. But what happened yesterday with the huge sell-off in NVIDIA and in the chip sector and the IA sector, Wall Street is always looking for some balloon and some bubble to blow up. And then when the public participates, by that point, they're out and the public eats it in the shorts. Let's face it. So I think that what was happening, we keep getting these warnings. We keep getting these warnings that gets then covered up. But my question is, because I'm right with you there, Zach, I'm wanting to be prepared on many, many levels, which is why the strategy that I execute is built in layers, right? But at what point will the public heed the warning to get into position so that when this whole house of cards comes tumbling down, that they're not so negatively impacted by it?
Yeah. So I'm going to assume that you're not in the camp with JP Morgan that says that this Japan carry trade unwind is 75% completed.
No, no, I would not be in that camp. And the other part of that is God only knows the derivatives against that trade. So it's never just one little area that you look at. And no, I'm not in the JP Morgan camp where it's 75% done. I don't even think it's 5% done, to be honest with you. I think we haven't seen anything yet.
Yeah. And to expand on that, folks, to simplify what's happening here, Japan had very low interest rates. I think they were almost negative, real rates, right? And so folks were taking out debt in Japanese yen, and then they were using that to leverage in other markets. What happened was the Japanese yen started to strengthen, and it only took a 25 basis point rate increase from the Bank of Japan to cause this. And they had to step in very quickly. We had to save the day. And we have some folks like JP Morgan and the talking head pundits on CNBC saying that this is all over or nearly over, and there's no reason to worry. But what we've highlighted on my channel and what others like yourself, Lynette, have demonstrated here is that we can't even put a number on this because we don't know how much derivative exposure there is. And this is part of what I like to call a global margin call. This is the debt markets across the board have been reset. It's not just the Japanese yen. That's just one part of a much, much bigger problem. And I had a guest on yesterday, Michael Gayad, someone who's been watching this Japanese yen carry trade, and he is of the opinion, as I am, and maybe you are too, that the main event is still coming. And the main event is the much larger credit event. And what's your opinion on that?
Oh, I am right on board with you. And, here's the thing. If you look at the interest rate chart on the interest rates that the Fed controls directly, what you see is a 40-year pattern of lower and lower and lower and lower highs until they got to zero and held it there for 15 years, and then they ratcheted up. That is a fundamental shift in the largest market in the world. That breaks a 40-year trend cycle. That matters. It matters hugely since the whole system is built on never-ending debt and never-ending money printing.
Yeah.
So, I think the main event, we haven't even marginally seen the main event. We've just seen little warnings. And did they fix the problem? No, when you're looking at Japan, since the 90s, they're the ones that have led the way in all of this innovative and creative manipulation of the debt market with QE, QT, QWI. And I mean, it's a tremendous alphabet soup. And here we are in 2024, and all of those manipulations didn't fix any problem. It just makes it bigger and bigger and bigger as they pretend and extend, which means that the crisis that's yet ahead of us is so much bigger than anything that we would have had to have done, bigger than 2008, because that's really when the system died, and all they did was make the system even more bloated and fragile. That's where we are, bloated and fragile.
And I tell folks, not only are we not done, we're just getting started. Like you said, it's hard to tell, but we have a long ways to go. And we had a participation trophy economy is what I called it. The cheapest interest rates in 5,000 years. Everybody was taking out debt. Markets were going up. That flipped. And folks didn't think that the Fed was going to do it. And to our surprise, many of us, right, at the fastest pace that they've ever raised rates. This effectively rug pulled Main Street economy. And in particular, as the credit has tightened, the Magnificent Seven that have still been, having a good time so far, they were still able to get relatively cheaper debt than Main Street economy, right? Now, I'm going to read off a couple data points here that kind of just show what's happened now with our economy, despite the Dow Jones setting a new all-time high, despite, some of these indexes rallying back up after the Japan carry trade blow up last month. We had a strong rally throughout the rest of August. Now the markets are spooked again to start off September. Here's some of the economic data that's coming out here. ISM manufacturing inventories have skyrocketed by the most in 3 years. That's a recession for manufacturing. Construction job openings fell below January 2007 levels, falling by 51,000 from June to July. So that's a recession in the jobs. And, I'm just reading off construction jobs, but we know that that goes much further because the U.S. job openings have also dropped to 7.67 million in July from 7.91 million in June, the lowest level since January of 2021. So there's a discrepancy between what the talking head pundits are telling us and what the White House press briefings are telling us and what's actually happening on the ground in the Main Street economy. Can you speak to that?
Oh, absolutely. First of all, you have to understand what the real job is, which is to keep everybody in the system, because then it makes the theft a whole lot easier, and it supports, like George Carlin, and some of you might not know who he was, but he was a brilliant comedian who said, this is just a big club and you and I ain't in it.
Right.
So, this really is about a wealth transfer mechanism. It's been that way since 1913, so this is not new. The difference is that was the beginning, and this is absolutely the end. So the things that you're talking about with jobs, right? What did they do? They blamed inflation on all of the jobs, but here's the thing, right? All of that new money that they've printed since 2008 has not just evaporated. It's not like once they print it, it evaporates. And, to your point, the big seven have access to whatever they want, free money, cheap money, but that money is still floating around in the system. It doesn't mean that the stock market is worth that much more. It means that this currency is worth that much less. And I need to remind everybody, going back to 2008, that the central banks came out under that point. It was Janet Yellen as the Fed chair. Was she in 2008? But whatever, my brain's it's a long day and a long week. But they came out, and actually, the central bank actually said, we are targeting real estate and stocks for reflation. So all of that money that's in the system, I'm not even so worried about the new money, although this next time the injection will be so much higher than it was in 2020, which was so much greater than it was in 2008. Yeah. We are at the end of this experiment's life cycle.
Yeah.
Period. And that's why you're seeing all of the geopolitical risks that are rising as we're sitting here and speaking. You're seeing the stock market that wants to correct. Mm-hmm. And honestly, the way that it works is the way that it works every single time. When enough risk has been transferred from the few, so from the elites, from those that have been chosen to win, to the many, to the public, to the retirement system, right? Mm-hmm. Where it is the public again that takes those losses, then to keep this whole game floating will become way too expensive, and the plug will be pulled.
Yeah.
And what was interesting about a month ago with the yen carry trade, and I came out and said the same thing, it's going to be very interesting to see what the Federal Reserve does and whether or not and how quickly they drop interest rates, because that's telling. And so the fact that they stood firm at that moment and did not immediately drop interest rates was more about not creating that panic, right?
Yeah.
Than what the reality is. Because we'll see how much they drop those interest rates between now and the end of the year, and whether or not they can do it in little teeny increments and do it on a steady basis, or they drop it 50 basis points and then 50 basis points. But it's too late.
Yeah. And you'll appreciate this. I like to make fun of, I call us crypto bros, right? And folks don't understand, with the Japan carry trade just being one part, and we describe it as a global margin call, this over leverage extends to crypto bros being able to take out 100x leverage on their crypto bets, right? This is all one big game that's been blown up. I think that the bubble has popped. We've seen
Yes.
that in crypto. We've seen this in other asset classes. And so, like you said, the market wants to correct. It wants to have a healthy correction. Now there's almost a scenario where the Fed could overcorrect and once again cause more problems in their reaction, because they're never ahead of this. But in their reaction, just like in the result of 2020, right? We're still dealing with that. Like you said, that money doesn't go anywhere. And I wanted to hone in on this. Let's talk about this transfer of wealth. I've been telling my community that the greatest transfer of wealth in world history is already underway, and
Yes.
the revaluation of assets is already happening, i.e. gold at all-time highs. That's a revaluation in real time. Now, last time we had you on the show, you said that the fundamental value might even be up towards 40,000 gold, right? And I said, I made a joke that it's going to be fun, going along that ride and finding out what that fundamental value is. And since we spoke, gold's gone from 2,200 to 2,500. We've already made a massive move. And to the point of the transfer of wealth, the economy starting to go into a recession, and not everybody's getting on the right side of this transfer of wealth. That's what I'm concerned about. So right now, how have you positioned yourself, and what opportunities are you looking at to get on the right side of this transfer of wealth that's underway?
Well, since I've studied currency life cycles since 1987, I'm really clear on what those patterns look like. And so where I put all of my wealth, I have absolutely zero wealth well, no, I can't say that, because I do have a level of cash, and I obviously have to have a bank account and that kind of stuff, but by far, the lion's share of my wealth, and I continue to build, is in food, water, energy, security, barterability, which for me is silver, wealth preservation, which for me is in gold, community, which is arguably the most important part of this, and in shelter, because this is a huge storm that we're dealing with, and people don't realize it because they haven't necessarily lived through it. They haven't.
Yeah.
But there are a whole bunch of people that have, and that are still living through it right now, with overnight resets in South America and in Africa and in many parts of the world, where we are seeing hyperinflation and then that overnight revaluation, right? They take something that has no intrinsic value and they revalue it against gold, which is the primary currency metal, and all intrinsic value. And it has that intrinsic value, and I'm sure because I scream this from the rooftops, because this is used in one place. This is used in every single sector of the global economy, as is this. And I'm talking physical, not digital.
Right. Now,
So,
when folks ask me, I say, hey, I'm stacking utility with no counterparty risk. What is that for me? Silver. I haven't started stacking any gold yet, and I got a question for you on that. And then I have some crypto, a very few amount of cryptos, and maybe we'll have to send you some crypto so you can be a crypto holder too, Lynette. But very few and far between for me in the crypto world, you know that. But it's stored in my wallets, not in a centralized exchange. So I have no counterparty risk. To the level of utility that my crypto has is debatable, but you get my point. I'm stacking utility with no counterparty risk in limited supply. And in the case of a silver, we're running historical deficits year after year. Now, in the case of gold, for someone like myself, and I'm selfishly asking you as a friend, what would you say to me? I've been looking at stacking gold, and I want to get started. My preference, what I'm leaning towards, is starting to stack smaller denominations, right? I don't have $1 million to allocate towards precious metals right now, but with the few pennies I do have, I want to start stacking some smaller denominations. The other part of this that's intriguing me is in the miners and in some of the stocks, but I don't know enough. And so can you speak to the difference between stacking some physical, which I already got my silver, but I want to start stacking some gold, and I'm thinking about some of those stocks, but I worry about, this once again opens us back up to counterparty risk. And if you don't know enough about this space, can you successfully invest in the miners?
well, I think a lot of people invest without understanding what they're investing in, because it is all, to your point, counterparty risk. It's all contracts. But when I'm looking at gold, and I just did this Friday, so it's reasonably fresh in my mind, and obviously I don't have it in front of me. But I was doing a piece on food, because food becomes the biggest issue for people as we go through these transitions. And according to the BLS, Bureau of Labor Statistics, food inflation on a nice select basket, a pretty broad basket, between 1913 and 2024 has gone up something like 2,500 and change percent. Silver during that same time frame and through Friday was up about 2,900 and change percent. So silver maintained, I mean, you got to look at a loaf of bread at $1.98 or something like that and wonder where they're really buying it. But okay, let's assume that that data is accurate. Silver clearly maintained your ability to purchase, and you could actually buy roughly 20% more with that same, if you had it in silver, than you could if you had it in dollars. So it maintained. But gold was at about, I think, like 15,000% and change, right? Because gold is the primary currency metal. Silver kind of straddles both worlds. Yeah. So I like silver for barterability, to make sure that if I have to go to the grocery store to buy a basket of strawberries, I have money to do that. Yeah. But gold is really about wealth protection and true proper diversification, so that if you are going to hold cryptocurrencies, or you are going to hold stocks, mutual fund, etc., if what you have, Wall Street wants you to think stocks and bonds are diversified, but they're not, because you can only convert it back into this crap, right? Tangible, physical, no counterparty risk outside of the market is gold. And that's really what they do the reset against. Yeah. So that's why the lion's share of my wealth by far isn't even the collectible gold. I use this raw pre-$33 $20 gold piece for my savings account, because it's not a whole lot more than this, which is my one. I can't say only, because of my bracelet I have New Eagles too. But basically, this is the only 1 ounce coin that bullion coin that I personally own. So when you're talking about fractional pieces, which are smaller than an ounce, what we do at Zang Enterprises, and it's based upon my studies of currencies and currency life cycles, the strategy, the sound money strategy that we execute and help people develop, is based on a layered approach, so that no matter where we are in this trend cycle, you are prepared to deal with it. And that even includes a level of cash, because that's going to be most recognizable to begin with, until people realize through hyperinflation how quickly that is losing value. Then you bring in your fractionals in both gold and silver for barterability, but it depends on what you're trying to accomplish, right? So if I want to go to the store and get some strawberries, I've got this. This happens to be a silver 50-cent piece pre-1964, constitutional money. But if I want to maintain my property taxes, then I want this, which is gold, because that will keep pace and more than the taxes. At least that's what history shows. Obviously, I can't guarantee anything other than I'll show up and do the work, but I want this. Now, what happens though, when they do those overnight resets, what is severely undervalued right now and what is severely overvalued, like income producing real estate, for example, or even dividend paying stocks that actually have some underlying value, because that's kind of hard to tell these days, right? But this is going to flip flop. When that flip flops, I want the ability to convert some of my gold holdings into those then undervalued income producing assets that will then generate, I'm buying them at a bargain, and especially as the price of gold goes up, that means that what I'm converting into, I'm buying it with nothing, basically. It's like a free trade for me. Pretty close anyway, depends on how high that reset goes. But it's a whole strategy, because I'm not saying that you can't do fine if you stack physical gold and physical silver. You're okay as long as there isn't an overt confiscation. You're okay to do bullion too. I can't guarantee that one way or the other. And historic precedents and current precedents around the world is telling me that there is a likelihood of confiscation. That's why I only do the collectible gold, and I don't have much in way of bullion. I basically bought this because I keep talking about it, so I felt like I had to have one in my hand. Okay.
That's how I feel about gold too. I have my, silver here as well too, and I like to hold that up. But I feel like I just want to be able to say that I do own gold. Wifey doesn't like gold jewelry, so I want to buy some coinage, or something. And it's interesting that you have concerns though about confiscation. This is something that we've talked about in our community in the past too. Is we say, hey guys, I know a lot of people around the world probably think that we're crazy here in the United States, but we have a precedent here. And, a lot of people around the world actually get it too, because their governments are even more oppressive, right? Mm-hmm. So can you speak to that? You're stacking collectibles, which is that a law per constitution that they can't be confiscated, or what's the deal with that?
So in 1933, Treasury Secretary Wooden, understanding what they were going to do in resetting the value of gold from $20.67 to $35, that overnight reset, it should have been higher to all the money they printed, but I don't think they felt that the public would accept that. So they reset it from $20 to $20.67 after they got all the gold from the public. Because I'm a huge proponent of sound money. Prior to that, the public had the power, because if you did not like what the government was doing, you could walk into the bank with a $20 bill and walk out of the bank with a $20 gold coin, 1 ounce of gold. And what that forced was fiscal responsibility, because they could only grow a certain level of debt and create a certain level of money. Prior to 1913, this is a $20 gold coin. Can you kind of see how big it is, or more accurately, how teeny weeny it is?
Yeah.
Right. But that backed a $1 bill. Right? So you could have a silver dollar, you could have this little gold coin, or you could have a silver certificate of $1. And you could go in and use any one of those in a transaction for 11 loaves of bread, right? That's what it would take. Well, today you could still buy the 11 loaves of bread with this $1 silver dollar, right? Because the spot is somewhere, you're going to pay somewhere around, $30-ish for something like this. But this little $1 gold coin, when the Federal Reserve was installed, instead of the $1 being printed from this and backed by this and convertible into this, they said, okay, Federal Reserve, you can print $2.40 now for every 20th of an ounce of gold that existed. So they inflated the money supply, but there were still restrictions when you had the gold behind you. And the people had the power, because they could limit. If you didn't like what the government was doing, you'd pull the gold out of the system and create fiscal responsibility and limitations. They didn't like that. So that's why they took the gold away from us. And once they did that, even though other countries had it, like I said, in the 60s, there was a run on the dollar. We don't hear this in history books, but the data and the evidence is all there, that foreign governments didn't like how we were printing more money than the gold that we had in deep storage to fund the wars. And the big one was, the Vietnam War, but that was actually happening prior to that anyway. So they were pulling so much gold out of the system that by 1971, when Nixon took us off the gold standard, or they say close that gold window, what he really did was he reneged on the U.S. maintaining a reasonable level of money printing to the amount of gold that we held in deep storage, because the value was supposed to be held at $35 an ounce. But when they did that in 71, again, that was an overnight revaluation from $35 to $42.22, which to this day is the official U.S. price of gold, which is why there is a $50 face value on this 1 ounce coin. But go to the mint and try and buy it for $50. It's not going to happen.
Right.
So in the U.S., we have had 3 confiscations of gold during the Civil War, during the War of 1812, and again in 33. But when they did that in 33, they knew what they were going to be doing to the value of the currency. So they wrote in there that coins minted prior to 33 were rare and unusual, and therefore devoid of confiscation and devoid of oversight. Because if you were like a jeweler or a dentist or in some kind of industry that buys gold, you could still buy gold because it's used across every single sector of the global economy, but you had oversight. And does anybody that own gold really want oversight? No, they do not. So Treasury Secretary Ludin slipped that in, and it's in a different classification today. And when you go back and look at all the laws that are still on the books that legalize the government taking your gold away from you, they are still there. So while some people say, well, they don't back the money anymore, not going to do it, that's hopium. That's not history.
Right, right.
You look across the pond at even Zimbabwe, who minted gold coins a couple years ago so that the elites could protect their purchasing power, and they just brought their 6th iteration of a new money out, the Zimbabwe gold, that is supposedly backed by gold and foreign currencies, which I'm watching this like a hawk, because it is a real life experiment that is happening right now. And even though they're trying their best to force adoption, number one, they're no longer issuing those Zimbabwe gold coins, and they are requiring all of the Zimbabwe gold miners to they increase their royalties. That's a form of confiscation. So they're forcing the miners. It goes back to what you were talking about with looking at mining stocks, right? So forces the miners to commit a certain percentage, and this is not just in Zimbabwe, this is happening in a bunch of other places too, particularly in Africa, which, by the way, many African countries are repatriating their gold that's held offshore as well. So there's a huge repatriation movement. You know, I like to look at it. First of all, I believe history, and I know that formulas and data are a lot smarter than I am. So I try and get out of my own way, right? So I don't go in with preconceived notions. I might be a bit biased because I've lived my life here. However, if it walks like a duck and it quacks like a duck and it lays eggs like a duck, I'm guessing it's a duck. And therefore, if I could do something that does not matter, am I right or am I wrong? Then that's what I'm going to do. And since I'm able to buy this so far below the fundamental value, I don't care about the premium. That's my wealth insurance. And if you look, the way that I determine what gold I will buy, frankly, go to the IRS and see what gold you can hold in a gold and silver IRA. And it's only bullion. So, and I don't know why, because this is the same carat weight as this is, right? all standardized. This is raw, right? All of this stuff is standardized, and yet you cannot hold it in an IRA. That's the kind of gold that I want.
Right, right. Now, I like to see how well it's held up. Oh, sorry, did I cut you off, Lynette?
Sorry. I'm just saying, governments, to your point, they can do anything that they want, but they're not going to just come and take it from you. They're going to pay you for it, just like they did back in 33 before they reset the gold.
Yeah, and I was going to say the chart that I like to look at, the comparison is gold. How many ounces of gold does it take you to buy the median home in the United States, right? Another great example of how well gold has held up. And I appreciate the insights there that you gave on why considering collectibles. Now, I wanted to ask you this. We have multiple states now. It's like over 40 states, I think, that have made gold and silver legal tender. And then we're also seeing countries around the world, like you said, that are trying to go to some form of gold back. I wanted to ask you, though, on the states, how big of an impact is this going to have as far as forcing the hand of kind of the federal government and the Federal Reserve and pushing forward this kind of reset revaluation as more and more people can start accumulating, stacking, and using these currencies, as they're intended to be used? How big of a threat is this to the Fed and the dollar?
Well, I love that you brought that up, Zach, because do you remember it wasn't that long ago that the president changed the classification of marijuana? And I said, why did he do that? Well, it was because of all the pressure from the states that had already made that change. So I believe that we need to have a grassroots sound money movement. I wish it was 40 states that have legalized it, but that's where we need to get to.
Yeah.
Absolutely need to get there. And the only way that we can do that is if we come together in community and, quite frankly, execute a very peaceful and quiet revolution by converting our fiat dollars or euros or yen, because this has to be a global movement, into sound money gold and sound money silver. That's the only way that I can see us having a seat at the table and really having a big impact. Because if we have that in our system, we don't need the Federal Reserve, do we?
No, yeah, you're right. When we have our community and sound money, we're going to be pretty well off. Now, as far as what are, I call it the enemy, what they have planned for us, because that's where we would be going, right? And I think that the DLT component, which is distributed ledger technology, does make that more liquid, more fluid, more easily tracked and traced, and it could be used for good, or it could be used the other way. And like you said, this is why I like stacking my metal, is I call it blackout barter. If the lights go out, if the systems go down, I can still transact. But then if we do go to some crazy 1984 reality, oh wait, we already are pretty much, right? Take a look around. You have an ability to be a little bit more free. And we're watching states force the hand. I love to see that. I also love to see other countries. I understand why they're dropping our dollar. They're dropping our bonds at the fastest pace since the great financial crisis. And they're stacking more gold than they have in the last 50 plus years. It's very clear the direction that they're going. And I think that DLT technology can help spur that and make these commodities and commodity-backed dollars more transparent, more liquid. Now, in the case of Zimbabwe, like you're watching, though, they're having a tough time selling this because they've already lost the trust, right? Now, I wanted to ask you about this, though. Go ahead.
Right, and it's not convertible.
Right.
So you cannot take the ZIG, and the ZIG is only in digital form at this point anyway. That's how it's being used. But you cannot convert the ZIG into this and pull it out of the system. So it still requires trust.
Yeah. You could, it's like the Bitcoin bros telling us that Bitcoin's going to be a store of value and has some utility. Same thing as the Zimbabwe government telling us that it's backed by gold. You take your bet. I think I'll stack my own precious metals. I want to ask you this, though. The banks are freaking out about Basel III. And they are, because the bought and paid for politicians in D.C., when Jerome Powell comes in for testimony, they've all been crying about these Basel III requirements and what this is going to do. And coming up with all of this fear propaganda about how bad it's going to be for Main Street economy. Nobody's going to be able to get a loan, period. Can you speak to what's coming next for the banks? Because what made me think about this is when you said the confiscation. Not only do we still have the laws for the confiscation on the books, but we also know that they've changed for bail-ins, right? So now the bail-ins are part of the program as well. So we have multiple threats. Can you speak, though, to the banks and the Basel III requirements that are coming?
Well, to be quite honest with you, the banks are in and have been and will continue to be in deep doo-doo. And this is really going to change a lot of the real estate market as well. And so real estate on a global basis it depends on where you are. So it's a little bit more and a little bit less. But in the US, it's 30% of the economy. So while the banks are already sitting and way underwater in all of those debts because of the interest rate change, interest rates, market value of the debt. So whether it's mortgages or auto loans or student loans or whatever. And the system is so fragile in here that quite honestly, all of the banks are completely insolvent. This just is going to require more reserves when we're in an ample reserve regime and there are no reserves really sitting back there for these bank runs. And that's what they're really trying to prevent. But I think that the shift into Basel III, look, 2008, when they came out with the Dodd-Frank Act, to appease everybody. And they wrote and they wrote and they wrote. And guess what? That was 2010 that it was passed. And all of the laws have not yet been written. They passed it, not really knowing what they were passing, but it appeased the public. Oh, see, we're doing something. We're making it so safe. And so to your point, the Basel III, but between then and now, they've basically taken all of the teeth out of it. And the banks always complain because they don't want to hold more reserves. They make most of their money trading. And this would hamper their ability to trade. But the reality is none of this really has any teeth. It's really for show. That is the job of the central banks and the governments and the talking heads, is to lull you into this false sense of security so you don't look at the man behind the curtain that's pulling all these levers. That you remain in the system and you don't do anything to protect yourself. And you need to. Yes. Am I doing gold and silver as my Sound Money Foundation? 100%. There are people there that can't do that though, or for whatever reason, they're blinded and think that everything, okay, like there'll be a major crisis and a major scare, and then that scare will calm down and people go, oh, okay, we're back to normal. We're not back to normal. We're ratcheted up another level and there is no normal. Life is so different today than it was in 2007. So different in 2007 than it was in 1970. So different in 1970 than it was in 1913. We are not back to normal, but the pattern that is happening is normal. We have over 4,800 different currencies that have no more value. And even I bought a $20 gold certificate. Oh no, this is actually, I made sure to get in a bill that was done prior to 1971 and one that was done after 1971. And I'm telling you, the way that they make these changes is for you, the public, to think that nothing has changed, when in reality, everything has changed. And to the Basel III and to what's happening in the real estate market, look at what's happening in the real estate market. They want this to keep floating, so what are they doing? They've decimated the income of realtors, right? All of these changes are coming in, but they're really about lulling the public into a false sense of security so that their wealth gets transferred to the 1%, And then the 1% can take that opportunity and buy those other assets when they're dirt cheap.
Yeah.
They're the ones that get bailed out. The public gets bailed in. And the only reason, this is my opinion, the only reason why we did not see bail-ins back in the regional bank crisis or the banking crisis, the banks that went out the beginning of this year, is because they're not yet ready for us to realize that that's going to happen here. But when you listen to the committee at the FDIC laughing about the fact, and if you want that cut, we'll send it to you, laughing about the fact that the public is going to be bailed in, but they don't need to know because that would create a run on the banks. And everything that they're trying to do is about not creating that run on the banks because these banks are so underwater and they would have to start selling this debt out to meet those withdrawals. They ain't going to do it.
Yep.
They are not going to do it. They're going to bail your money in. And it's when you are lulled into enough of a sense of security that you don't think that that's going to happen. Hey, look, they did the regional banks and they bailed everybody out. But they're looking at a tremendous amount of uninsured deposits. Well, wait a minute. That shifted, I think, QE started in March of 2009. And we started to see the growth of uninsured deposits, which transitioned above insured deposits. I'm pretty sure that was either 2013 or 2014. And now it's by a huge margin. Why? Because of all of this, right? I mean, who could have seen that coming? Oh my God, a blind monkey could see that coming.
Well, it's funny because when people ask me or say, this time's different, I say, well, yeah, it's a whole hell of a lot worse. We've never been here before. And the fact that folks think that this time we're going to avoid, we're going to achieve a soft landing is comical. I joke. I say, the only thing that's going to be a soft landing is you planting your butt on your couch. Hopefully it's a soft couch because you're not going to have a job, which is what we're seeing, right?
Yeah.
Now, let's wrap this up by what just happened, though. Last year, when the banking crisis started, we just went back to like everything's normal, like you said. When Janet Yellen came out and willingly said, that we are, willing to let those that are not systemically important fail, they will be allowed to fail, but the systemically important ones will be backstop. And they introduced the BTFP, Bank Term Funding Program, and they had to basically pronounce a full backstop of the banking system if you're systemically important to save the day. Fast forward 1 year here in March, that has expired, and it's been nothing but volatility since. The Japan carry trade unwind starts here last month. And so here we are. It's coming back around. Here we are. We roll in. We got 2 months till this election. We got until January until a new administration and a changeover would happen in D.C., but it's going to be the same story as before. I've been telling my audience, no matter who gets elected, that money printer is going to get turned back on, and all hell's about to be released between here and then. What's your take on what happens between now and the end of the year?
Well, I agree with you 100%. And they are looking at how they can change that deposit insurance. But understand, when they first put the deposit insurance in, was what year was that? Oh, 1933. This is a con game. It is all about confidence. Oh, my money is insured. Well, you can get a statement. Let's go back to Cyprus in 2013 when they were experimenting with the bail-in to see how people would respond to it. And what they do at first, the Bank for International Settlements, which is a central bank, came out with a report after the bail-ins in Cyprus, showing how they would do this over a weekend with insured deposits or uninsured deposits. So they've set this whole mechanism up in place already, and it's been tested. And by the way, there are charts and graphs where you can see that you and me, us little guys, were what's called sticky. In other words, how often do you change your bank? You don't, right? Typically, unless there's a problem, but you don't change your bank. However, the hot money, which goes back to the uninsured deposits, right? And hot money means that it'll flow in and it'll flow out. That taxes the system. And it's all because of all of this money printing that's been going on that's created this market. It ain't over yet. 2008, it ain't over yet.
Yeah. They only blew it up and made it 10 times worse, 100 times. We don't know. That's the whole point, right? With this derivatives, and folks ask, well, what's your gold prediction? Like we talked about last time. Well, the fundamental value based off of today's numbers, before they fire back up the press again, before they do more QE, before they bring in more stimulus. But with today's numbers, there's a discrepancy between today's market price and the fundamental value. The fun part about the journey is we get to find out. And the more that they do this, the faster we'll be going towards that journey, that fundamental value. So I've been saying that we are going to get, in my opinion, a correction before the election for the traditional stock and equity market. And we've kind of already seen it break, right? And so I've been telling my community, hey, we've seen in the past, so just look at 2007, when the Fed did cut interest rates, the market rallied for another couple weeks before the bottom fell out and the S&P 500 fell by 57%. So I'm looking at these opportunities, and I got my defensive side of my portfolio with my precious metals and cash because I'm staying liquid, so I can buy more of these assets if that correction does come in. Now, how big of a correction is it going to be? Is it going to be a V-shaped recovery like 2020? We'll see, but I'm ready to allocate if the levels come in on the assets that I want to buy more of. Are you in a similar position? You mentioned you do have some cash. What are you looking to do here to finish off this year for your investments?
Well, I keep stacking, and I'm also actually feeling very urgent about getting the property the bug out location that I have up north all settled in, because it really is about what we need to be comfortable and sustain a reasonable standard of living. And frankly, it takes a community. It can't be just me, because I can't do everything. I can't go out. It's interesting. People come onto my urban farm here and they'll go, oh, when do you have time to do all of this gardening? Well, I don't. It takes a community to come together to do all of this. I think that if we get a V shape, it's just about keeping you stupid, because what do people do? They open up their 401k statement or their IRA statement, and if it looks okay, they assume everything is okay. But when they do those overnight revaluations, all of that inflated fiat money value plummets, right? I don't think that piece will happen before the election, but I keep stacking. And I keep making sure that I have enough room, because I don't really want 40 people sleeping on my bedroom floor up at the bug out house. May still happen. I've got lots and lots of blow up mattresses, but I am working there.
You better bring some gold. You better bring some food or some skills to the table, huh?
Got to bring some skills. I got the food, quite honestly. I put in a production orchard as well as a kitchen orchard last year. And I do have hot houses for growing, and I have a ton of long storage food up there. So I'm not worried about, and we've got lots of game up there as well. So I'm not concerned about food up there. I've taken care of that. I'm more concerned about having 40 people sleep on my bedroom floor. Because that will be fun.
If anybody's looking for a job, Lynette's going to have a couple. You're going to need a janitor, a cook, a couple positions to fill there.
We currently have doctors, engineers, farmers, construction people, teachers, cooks, videographers.
Yeah. We can make some content while the world goes to hell in a handbasket. That's good.
Oh, yeah. Starlink up there, so I have phenomenal reception, and I do have a studio up there if I need to film. So I will continue to film and help people. But yes, I mean, this is a great time if you can't afford for whatever reason. I mean, look, gold and silver in any form are monetary at its base. There are so many different ways that you can accumulate on any budget at all. But something that I encourage people right now is to hone your skills, learn a new skill. If I had to lay irrigation, I could do it because I had to do it when I was first developing my urban farm, right? Do I want to lay irrigation? Not really. But could I? Sure, I could. I could do it. I know how.
I love it. I love it. And maybe we'll have to have you back for a whole conversation about kind of prepping community, because there's a lot to go in there. It's not the sexy content that sells as well, right? But it's so important. And that's why I talk about it too with my community. Now, final question, Lynette. I imagine after you finish up these videos and these interviews that you have a whole cleanup there between your money gun, you got your silverware, you got your coins. How long does it take you to clean up your office after you do a typical interview like this?
Takes me no time at all. Takes them, Arthur, Adam, and Chandelier, takes them a few minutes. How long? There's 3 of them. How long does it take you guys?
5 minutes.
About 5 minutes
if we're lucky.
Yeah, 5 minutes. Good. Yeah, I imagine that you just got a mess of money, coins, silverware. That's awesome. Well, Lynette, it's always a pleasure. We're going to link up everything down below in the description of this video for the community, guys. Lynette is a must follow in this space. You know, I remember just in Vancouver this last year, Lynette was on the silver panel talking about $30 silver. Well, here we are. We were talking about gold at $2,500. Here we are. This thing is moving. You don't want to get left behind. I think that Lynette is such a wealth of information when it comes to what's happening in the markets, macro, geopolitics, and then when it comes to what we can do to protect and save our wealth that we have stacked here. So, Lynette, any final comments from you?
Yeah, I mean, we keep getting warning after warning, and even though they may be covering it up, they are not eliminating the issue. To your point, Zach, it just keeps getting bigger and bigger and bigger, which means that when this whole thing explodes, it's going to be so much worse for everybody. So stop. If you've been procrastinating, stop. I mean, it's real. You know, I was talking to somebody the other day, and this is a kind of like a little digress, and he goes, oh yeah, I've created all these problems for myself. I just keep digging myself into a hole and I don't know how to stop. And I said, just stop digging and then do something different. So you look at the whole mantra: food, water, energy security, barterability, wealth preservation, community, and shelter. Where do you feel the most vulnerable? Do something in that area so that you're not as vulnerable, and then move on to the next area where you feel most vulnerable. But I would say that honestly, community has risen to the tippy top, because I've had the luxury of preparing for this since really 2008, because I knew the system was dead and I knew that it had a reset because of all my studies.
Yeah.
Now we don't have that luxury anymore, but you have to create a local community so that you are not insecure in your food, water, energy, etc. That whole mantra piece. Go to a farmer's market, meet the people that grow your food, and go and give them a day. You're going to learn some skills, and you're going to create a relationship with that person and in that community that's going to help you get through this. Because if they have to decide to give you that they know, because you gave them a day's labor versus somebody else, they're going to pick you. Right. And globally, on that community piece, we have to come together in a sound money movement. And we can do that by converting into this, because if there are enough of us that actually are stacking both gold and silver, then we've got a shot at having a seat at the table. And if we have a seat at the table, and I'm the one that's sitting there, or somebody else like me is the one that's sitting there, they're gonna demand, I would, convertible money. So, okay, maybe we have this, maybe we even have it in digital form. But if I don't like what my politicians are doing, I'm pulling my gold out of the system. It must be convertible or it simply won't work. So join that movement. You don't have to do anything other than protect yourself with physical gold, physical silver.
I love it. The sound money movement. And on community, it's the most important thing, like you said. I mean, look across the country right now, we got some crazy lawlessness going on in some communities. We want to get away from that, and we want to surround ourselves with like-minded individuals on that same purpose and mission. So, Lynette, it's been an absolute pleasure. Everything will be linked up down below, folks. Make sure you guys go follow Lynette. I watch all of her content myself, and we'll look forward to having you back here soon, Lynette. Thank you again.
I look forward to it. Are you doing VRIC this year?
I will be back. Yep, I'm right up there in that neck of the woods. Yep. All right, folks, on the way out, if you could like this video, everything's at ZachRector.com. We'll have the links on down below. It's been a pleasure. We'll see you guys in the next one. Thank you so much. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.